So today we're going to talk about property taxes and how it particularly affects you if you have a loan. And if you have a loan and your taxes are included in your mortgage payment, please do not miss this video. Stay all the way to the end because there's some really important information. So welcome to our channel. We talk about Wichita Falls on this channel, and I love Wichita Falls. And if you watch any of our videos, you'll know how much I love Wichita Falls. And today, I love Wichita Falls so much that I'm about to give you some really good information about your property taxes. Because I've done a lot of loans for people for houses in Wichita Falls. And this is particularly directed to you, but also everybody else that has a mortgage where your property taxes are included. So here's the thing. Most people think that this is some magical process where your payment is always going to be the same because it's called a fixed loan, but it's not, because your loan payment is fixed, but guess what? Your taxes and your insurance are not. For the most part, your insurance might fluctuate a little bit, but boy, oh boy, oh boy, your taxes are going to fluctuate like crazy this year. And the reason for that is, I've already done a video on the assessed value for Wichita County, and guess what? The whole entire country is going through this. Why? Because the real estate market has been on fire, and what is happening is all the properties are selling for more, which means all the values are going up, and that means that the tax assessor says, oh boy, I'm going to assess them for a higher value. When you get assessed at a higher value and your tax rate could stay the same, your taxes are going to be more. Now guess what? Your mortgage company does not sit around and go, hey, I wonder what they're doing over there in Wichita County. I wonder if their taxes went up. They wait for the tax assessor to tell them what the new bill is. But the bills don't come out until November. And the assessments happened last month. So what is happening is, particularly in Wichita Falls, but this is happening for all of the counties, and it's happening for people all over the country, but particularly in Wichita Falls, Texas, pay attention. Your taxes are going to go up not only because of the increase in value, but that bond measure for the schools hasn't been calculated in yet. And they don't meet until June, possibly July, to ratify this. And that will go then on probably November. I'm not 100% sure because they will not confirm or deny. But if they do, it's like getting a double whammy. What that means to you is, let's say that your property taxes are $1,200. I'm just using a number so I can divide easily. And you divide that by 12, the amount on your mortgage payment for your taxes is $100. Well, if for some reason your taxes went up to $2,400 a year, then now your payment would be $200 a month. The difference between $200 and $100 is $100, right? But that's not all. What happens when you have an escrow account for your taxes and your insurance is all they do is collect the payments, whatever they are yearly, divided by 12, and that's your monthly add-on. If it's not right, when they reevaluate your escrow account, they will say, oh, we don't have a month. They will say, oh, we don't have enough. And it's called an escrow shortage. What happens is they take that escrow shortage and they say, here, Mr. or Mrs. Borrower, you can pay this shortage. So in this case, it would be $1,200, or we can add that shortage onto your payment amount. But the problem is if they were to do that in this scenario, they would add $100 for the shortage and, whoops, another $100 for how much the taxes should be. That's a $200 increase on your payment, which I am telling you, in this economy with gas prices going up and our taxes about to be increased and all of the other things that are going up in the world because inflation is on the rise, that will hurt. So, to at least mitigate some of it, to be preemptive, here's what I recommend. Go find your mortgage statement. Look at how much your property taxes are right now. because you can go onto the website, and I'll link the website here. You just put your property address in and look at how much your lender is collecting per month. So let's say it's $100, whatever it is, you multiply it times 12. Is that enough to pay those new taxes? And then give yourself a little bit of a buffer for even more. And I want you to start setting aside that amount of money each month, because come November, when these escrow accounts, November, December, January, these escrow accounts are reassessed, your payment is going to go up, and not in a very fun way. If you have any trouble whatsoever trying to figure this out, please go to the link in the comments for this video, ask or make an appointment for a Zoom call with me, because I will walk you through it. We'll do a screen share. We'll look at your mortgage statement, because I promise you, I'm doing this because I want you not to have to go through this payment shock. It will be painful. You won't like it. And at least you have the knowledge right now so you can begin to do something to prevent it. Personally, I recommend that all borrowers not escrow their taxes, insurance, and pay them themselves. I do that, and so I don't even have a mortgage statement to use as an example for you, because I always know what my taxes are, and I make sure that the money is there. But that's neither here nor there. I want you to be 100% prepared for upcoming November, because things are going to change, and not in a good way. So if you have any questions, drop me a line, make a comment. I would love to help you and watch some of these fun videos coming up next. Y'all come back now, you hear?